Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Discover 7 dividend stocks that generate more than $500 monthly income. In today's market shift towards value and stability, explore why companies pay dividends, what to expect, and potential pitfalls. High yields can be enticing, but beware of dividend traps. Learn how to build a reliable passive income stream with dividend-paying stocks in this insightful guide. Starting off with stock number 1, JP Morgan Chase and Company. Our first dividend stock pick is JP Morgan Chase, a prominent player in the financial industry. Currently, JP Morgan offers a dividend yield of approximately 3.4% to 3.5%, translating to an annual dividend payment of around $4 per share. While this yield may not be the highest, it surpasses the S&P 500 benchmark of about 1.7%. What sets JP Morgan apart is its substantial financial cushion, boasting over $1.7 trillion in liquid assets, including an impressive $700 billion in cash. This financial stability reduces the risk of bankruptcy, ensuring the safety of your investments. Furthermore, JP Morgan is strategically positioned in the financial sector, particularly in anticipation of rising interest rates. As the Federal Reserve plans to raise interest rates, banks like JP Morgan can capitalize on the interest rate spread, leading to an expected increase in net interest income throughout this year and the next. This favorable environment bodes well for JP Morgan shareholders. In summary, JP Morgan Chase offers a dependable source of dividend income with strong financial fundamentals, making it a valuable asset in our dividend-focused portfolio. Stock number 2, Avy Incorporated. Our second dividend pick is Avy Incorporated, a prominent biopharmaceutical company boasting a diverse drug portfolio spanning oncology, immunology, and neuroscience. Avy currently offers an enticing dividend yield of 3.95%, equating to approximately 5.64 cents per share annually. While not a household name, you've likely encountered advertisements for Avy's flagship drug, Humira. This medication effectively relieves pain and swelling in conditions like arthritis, Crohn's disease, and various skin disorders, consistently ranking among the best-selling drugs with over $19 billion in sales in 2019. Despite ethical debates surrounding pharmaceutical investments, Avy's strong industry presence stands out. They hold leading patents on multiple drugs and invest significantly in research and development, diversifying their product portfolio and establishing a robust economic moat. Avy's robust $22.9 billion annual cash flow adds to its allure, and its inclusion diversifies our portfolio as the sole healthcare or pharmaceutical stock. Despite the impending challenge of Humira's loss of exclusivity in 2023, their commitment to research and development makes Avy an attractive investment. Owning 100 shares of Avy with its 5.64 cents per share annual dividend yields $564 in yearly dividends, enhancing our dividend-focused portfolio's value. Well, before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and hitting the notification bell to stay updated with our latest content. Stock number 3, PepsiCo Incorporated. You're likely familiar with this company as it's a household name. PepsiCo not only sells various soft drinks and beverages but also owns brands like Gatorade and Frito-Lay, a consumer packaged goods company known for its potato chips. Currently, PepsiCo offers a dividend of $4.60 per share, which translates to approximately $1.15 per quarter for each share you own. This results in a 2.73% dividend yield, similar to JP Morgan. Choosing Pepsi over Coca-Cola might be a wise move due to its diversified product mix. In addition to beverages, PepsiCo's revenue includes about 20% from consumer packaged goods like chips. This diversity can offer growth opportunities. Furthermore, PepsiCo benefits from pricing power as demand for its products remains strong, even in inflationary environments. With its long-standing presence in consumer demand, PepsiCo is likely to remain a stable investment option for your lifetime and beyond. The Fourth on our list is Kraft Heinz Company, a prominent figure in the consumer food industry, renowned for its products like ketchup, mustard, mayonnaise, and A1 steak sauce, with a substantial $26 billion in net sales last year. Offering a reliable 4.62% dividend yield equivalent to about $1.60 per share, Kraft Heinz delivers a steady income stream. Despite the stock's relative stability, which contrasts with the S&P 500's 17% decline, it's essential to note that Warren Buffett retains the stock in his portfolio. Kraft Heinz' focus on essential food products ensures consistent demand, even during economic downturns. However, closely monitor Kraft Heinz as recent years have seen a slight profit decline, possibly due to shifting consumer preferences towards healthier, non-packaged foods. While the dividend remains strong, keep an eye on the company's financial performance in upcoming quarters. If improvement isn't evident, reconsider your portfolio allocation. Stock number 5, Exxon Mobil Corp. While it's a controversial choice due to its association with fossil fuels and environmental concerns, it's worth considering as a short-term investment. Exxon has benefited from the current energy market dynamics, with energy stocks performing well this year, in contrast to tech stocks. They currently offer a 3.78% dividend yield, translating to approximately $3.52 per share annually. Exxon has also seen a 50% increase year to date, making it a strong performer. Additionally, Exxon serves as a hedge against inflation, as energy prices tend to rise consistently. Despite the global shift towards green energy, fossil fuels remain integral to various aspects of our daily lives, from transportation to agriculture. While there are risks associated with Exxon, including the transition to green energy, it can still be a valuable diversification tool in your portfolio. Keep an eye on government policies and industry changes, but for now, Exxon remains a reliable income source. The sixth stock on our list is Home Depot, and it's a solid choice for dividend income. Home Depot pays a generous dividend of $7.60 per share, resulting in a 2.7% yield. This company has a track record of stability and success, consistently outperforming the S&P 500 and NASDAQ over the past decade. With over 2,300 stores and $150 billion in revenue, Home Depot dominates the North American home improvement retail market. What's promising is that Home Depot serves both professional contractors and DIY customers, diversifying its revenue streams. The balanced approach ensures a steady income even if one segment slows down. Additionally, Home Depot boasts impressive profitability with a 33% gross margins and 17% EBITDA margins, making its dividend secure. As the demand for home construction rises in the United States, Home Depot stands to benefit. With a virtual monopoly in the home improvement sector, similar to Google's dominance in search, Home Depot has a strong economic moat, ensuring its continued success. The seventh on our list of 7 dividend stocks is Johnson & Johnson, a Warren Buffett favorite. With a 2.7% dividend yield akin to JP Morgan Chase, it equals to around $4.52 per share annually. Johnson & Johnson is renowned for its stability and popular brands like Tylenol, Listerine, and Band-Aid. It thrives during economic downturns as medical professionals consistently recommend its products. As a dividend aristocrat, it has consistently rewarded shareholders for over 50 years, showing strength compared to the S&P 500. With a strong balance sheet and minimal short-term debt, even during recessions, it's a dependable choice for dividend income, offering stability in all market conditions. In conclusion, these 7 dividend stocks offer a reliable path to earning more than $500 per month. With a diverse portfolio spanning various sectors, they provide stability and the potential for consistent passive income, making them a valuable addition to your investment strategy. We want to hear your thoughts. Are there any specific dividend stocks you'd like us to cover in our future videos? Let us know in the comments. Well, that's it for now. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.